200x returns with 23% CAGR in 26 years. So this is a track record of Nippon India Growth Fund. Earlierly it was called as Reliance Growth Fund. So more about this in today's video. Hi, hello, this is Ganesh Sindhu, your stock market profit coach and author of the book One Page Mutual Fund Plan. Please check out the description if you want to buy this book. So today's topic is 200x returns in 26 years. Is it a good fund? And most of the time people used to ask me, why should I invest in mutual fund and can it be there after 10, 20 years? What will happen to my money? And this fund is a returns 200x returns. Just look at the NAV of the fund was 10 rupees in 1995 and now it is crossed 2100 rupees. That is a growth of this Nippon India Growth Fund. So the point is it acts as per the name growth. Earlier it was with Reliance Capital and it was called as Reliance Growth Fund, and in the last 2 years it has got transferred. Reliance Capital was fully acquired by Nippon and now it is called as Nippon India Growth Fund. So that this is a growth story of this mutual fund, and just look at the NAV. It was started at 10 rupees in October 1995, and just look at within 5 years it crossed 8 years it crossed 100, and it took another 4 years to cross 500, and just look at by 2017 it crossed 1000 rupees, and in the next 4 years it crossed 2000 rupees. Just look at the first few years I had difficulty in crossing 100, 200, 300, but in the last 4 years it has crossed 1000 rupees. Just look at the way the fund has performed because it acts true to its nature, the growth perspective, right? So let's look at the why how it was possible for this fund to grow at 200x returns in the last 26 years. Okay, so identifying tomorrow starts today. So it is a mid cap fund, open ended. Just look at it. This is a product note which is available in Reliance Nippon Growth Fund, because earlier it was Nippon, so that is the reason I keep telling Reliance. Okay, so now it is Nippon India Growth Fund, started in 8 October 1995, and the fund size as of now is 11,321 crores. This is an investment philosophy they are focusing on. Focus on four verticals which will play grow faster than the economy. Which are those? Consumer discretionary, healthcare, financials, and outsourcing to global corporations. These are predominantly IT companies which will grow, and this fund follows bottom up stock selection without any style bias. So it means they're not following any style, but the point is on particular stock basis they are looking at and they are investing in it. Just look at this is the size of the companies which are focusing on. More than 36,900, close to 37,000 crores, 12% market cap, and between 11,735 to 36,954, 69%, and less than 11,735 they have 99% market share. And this is a percentage of return since inception. Just look at SIP percent is, I think, the perform close to almost 31%, I guess. Just look at 1 year, last 3 years, 5 years, and in the long run that is the kind of returns you had seen. This is possible just because if you stick with the SIP or something for a long period. And the top 10 stocks right now are Varun Beverages, Cholamandalam, L&T, SRF. All these are high growth companies in the mid cap sector, and all these as an individual company is performing like anything in the last couple of years, and this is reflecting in this mutual fund growth story also, right? And this is the important parameter. Just look at Nippon India Growth Fund since inception is 22.57 percentage, and BSE Sensex Total Return Index, which means the Sensex Top 30 is giving you 13%, and BSE Mid Cap Total Return Index is 13.72, right? Whereas this fund, even in the long run, it may be giving around, let's take 15% on an average index, but this fund has given 22.57. This is the advantage of investing in active mutual fund. Just look at value of 10,000 invested in 1995 since inception would have been 19 lakh 51,392 rupees. 19 lakh 51, close to 20 lakh rupees. Whereas in Sensex, this amount would have been 2 lakh 38,200, 198 rupees. Can you see the difference from that time till now, right? Fund managers are changed, but the performance is unbeatable, right? Long time period, this is a kind of returns we all need to look up, right? So the advantage of investing long, right, say 10, 15, 20 years, the more you stay, better is the returns. Money keeps compounding. Possibility of more than 20% returns is the second fund where I am seeing more than 20% returns. Earlier I saw an ICICI Prudential Technology Fund where they had given more than 20%. This is one another fund. I think this is the longest, 25 years, still 23%, 22.57, approximately 23% returns. So if you are somebody looking to start an SIP or something, right, please do start. Don't procrastinate. The more you stay, better is the returns. And you should always look for retirement. And if you want 200x returns on your investment, just keep investing in these kind of funds and ask a distributor or your mutual fund advisor who can help you with the fund choosing and investing. And this is an educational video and this is not a promotion, so don't go on invest and ask me for anything, because this is purely on education. You should invest based on your risk taking capacity and how far you can stay invested in a fund, right? Thank you so much for watching. Stay tuned for more information on mutual fund, stock market, investments and personal finance, and subscribe to my channel. Thank you so much.